Welcome back. In company news, that the half-year mark, sustained high interest rates have worked in PSG Financial Services' favor. The company reported a 28% jump in recurring headline earnings per share and a return on equity of just over 26%. The dividend was hiked by a similar margin. Company CEO Francois Gouws joins me with greater perspective on the performance. Thank you so much for your time, Francois. Now, just, from a bird's eye view, there's growth all across the business. Would you say that the business shrugged off a tough operating environment?
Absolutely. I mean, I think economic growth has been slow, and prior to the election, asset prices were quite depressed. I mean, I think we've benefited subsequently from a good political outcome, but it's still early days. And then I guess the other observation to make is we've had 10 difficult years, not just one difficult year. And I'm pleased to say when you look back over the 10 years, PSG quadrupled its earnings. So despite very challenging conditions, the firm's actually done exceptionally well.
Well, actually, something that not a lot of businesses say, benefiting from the high interest rate environment, which is something that has worked in your favor. Talk to me about how that has filtered through, but also now with the fact that we have entered an interest rate cutting cycle, if maybe those tailwinds could be limited.
Sure, as you know, interest rates peaked out at about 8.5%. So we've had a rising interest rate cycle. We've benefited in two ways. Firstly, our shareholders' funds were mostly invested in cash. We had a view that markets would be difficult, and if you're able to get a risk-free return with rising interest rates, then you ought to take advantage of that, which is what we've done. And of course, we've had that benefit for the full year as opposed to the previous year where the rate hikes, happened during the course of the year. And then, if your assets, if rates are accumulating at 8-odd%, then the other benefit that you have is your actual assets grow by at least that rate, and our fees is a function of assets. So, those are at least two benefits that we've got from higher interest rates.
And I mean, also talking about favorable equity market conditions, are you banking on continued momentum there? And if so, really, what's buoying your optimism?
So, things changed quite dramatically after the election with the formation of the Government of National Unity. I mean, you've had a pickup, albeit off a low base, of a variety of asset prices, property, equity, bonds. So it was a very sharp upward re-rating. But of course, now we're in difficult territory because the markets have started to discount all the good news that has emerged post the formation of the Government of National Unity. And I think what we're now waiting for is, the fundamentals to actually change. So some of those fundamentals that have to change is we actually have to see different policies, we have to see different legislation, and we actually have to see implementation. So until that emerges, there's a very real risk that the gains that we've seen over the last couple of months, could easily be reversed. And I think that's why, I think the market, investors in general, market professionals like ourselves are very, very carefully going to listen to the Minister of Finance when he delivers the medium-term budget speech, at the end of the month. I mean, that will give us a clear indication of whether some of the things that I've mentioned earlier, whether that's going to come to pass.
It's really quite interesting what you say, because really sentiment has picked up, but obviously we are waiting for that to really all filter down to the reforms that have been implemented. I guess progress has been made, but seeming that it's not going fast enough. So I was going to ask you what is keeping you and your clients up at night, and I guess really it's about the risk that does still remain in the fundamentals of economic growth. But would you say that for the business, even with all of that, that the runway for continued growth has been set?
Look, we always plan for the worst and hope for the best.
Yeah.
We have responsibilities. We've got 800,000 customers and clients. We're an advice-led firm. And, we need to help them plan for retirement and for the various goals that they have. And in our insurance businesses, we need to ensure that the assets and so on are protected. And so you're always mindful that things can go wrong. And so while you're always hopeful that that things will turn out for the better, you have to make sure that you protect the downside. So from our point of view, the ground has been set for very positive things. If those things emerge, you can have a very good outcome. But what we essentially do, both in for our clients, but also in our own shareholder funds, is we diversify assets. We try not to place all our risk and all our bets on South Africa succeeding. We diversify our assets by asset class, and we diversify assets also internationally, so that if things don't turn out as we hope, then then our clients' assets are protected and our assets are protected also.
And just operationally, Francois, I know that in your cost base, there's obviously the cost of the investments that you are making within the business to enhance business operations. At what level of comfort are you with your operating margins when it comes to that?
We've consistently said that we're a South African-based firm. We are a fast-growing firm. And you have good years and bad years, but for the most part, as I've mentioned already, we've been growing very, very quickly. If you're growing as quickly as we are growing, then you need to create capacity, you need to create infrastructure, you need to create processes, not only to deal with with the growth rate of gaining clients, but what you also have to do is you have to deal with a changing environment. So the changing environment happens in a variety of different ways. Technology is being enhanced all the time. The cloud, artificial intelligence. But then you also have to deal with things like cybersecurity, and there's a variety of different threats that you have to cope and cater with for. And then also, I think clients demand that the way in which they service is far more real time. It's far more electronic, it's far more digital. And even though they very much still like to talk to advisors, they want a variety of their services, whether it's statements or tax certificates or confirmations of transactions. They want that to be electronic, and they want that to be immediate. And those are some of the things that we've been investing in consistently to make sure that our clients don't just have peace of mind in terms of making sure that the assets are diversified, but they also have ease of use, that we service them in a way which is, easy to use.
All right. And that is not affecting your operating margins at this point. You're still at comfortable levels with that.
Yeah. So, I think from an operating margin point of view, operating margins are a function of the investment. We expense all our capital expenditure. So if you're investing as fast as we have been, then it affects your margins. So our margins have been relatively flat, not because our business isn't growing fast, but because we're investing to match that growth. And if you're a fast-growing company like ourselves, the growth comes not from expanding margins, but it comes mostly from growing your top line and then servicing that top line coming from growing clients, and then making sure that the promise that you make to your clients in terms of service and some of the other things that I've mentioned, that's kept by continuing to invest in your franchise. So margins itself is not really the focus, of the firm.
Yeah.
What we are focused on is to build long-term sustainable growth and to back that up with consistent investment.
All right. Well, thank you so much for your time and really giving us insights and more detail on those numbers that came out from PSG Financial Services. Francois, that was Francois Gouws, CEO of PSG Financial Services.